I'm Carissa Chappelle, and joining me today is Jim Fetgatter, Chief Executive of AFIRE. Thanks for joining us, Jim.
Thank you for inviting me.
You recently released your annual AFIRE survey, and U.S. cities dominated the list of top global cities for investment. What would you attribute that to?
I attribute it to the fact that I think they have some faith that the U.S. is coming out of the recession. The recovery may be slow, but I think they feel like that it's a definite recovery and that we're not falling back down into another recession, and perhaps we've gotten the worst of our problems behind us. I think the other issue is that they don't have a lot of good alternatives. If they have a need for stable, secure investments, the U.S. really is the only place for them to go in the world at this point.
Aside from the U.S. being one of the preferred investment markets, what would you say were some of the other changes in this year's report from last year's?
There were a couple of interesting things on a global basis for us. One was Turkey showed up in one of the questions about capital appreciation, and the other thing was that China didn't get any votes for that on that. So it appears that there is some shifting of their interest, maybe not totally away from China, but certainly they don't have high expectations of China, and there's an increased interest in Turkey that's come back again after it's been dormant for a while.
That's good you mentioned Turkey, because I wanted to ask you, Turkey emerged on the list as one of the top 4 markets for capital appreciation, like you said, and it was the 3rd ranking among emerging countries for investment dollars. What factors would you say have contributed to Turkey topping the list?
If you're going to invest or you're going to have a foothold in the Middle East, Turkey is probably the logical place for you to go. It's a very stable country compared to the rest of the Middle East, certainly since Arab Spring. So I think if companies are looking to establish a beachfront in the Middle East, Turkey is a good place to go, and I think that's what is attracting our our real estate investors. And also, as I mentioned earlier, Europe is a little iffy as far as investment is concerned. They're still not quite out of their crisis yet. So if you have a European allocation or for that part of the world and you need to invest, Turkey may not be such a bad idea for some risk-adjusted returns as opposed to investing in some of the countries in Southern Europe.
What were some of the other trends that you noticed in this year's recent survey?
Some of the other trends were that there's increased optimism. They are, as we compare the sort of an optimistic rating compared from year to year, and it certainly has gone up this year, much more so than last year. This is not a different trend. This is the continuation of a trend, but multifamily is still the top product for them, again, for the 5th year in a row. And the other interesting thing was, even though Washington, D.C. is still in the top 5 cities globally as well as the U.S., the change in positioning of Washington and particularly San Francisco was fairly dramatic. New York was still number 1 in the U.S. San Francisco's stock, if you will, rose very high, and Washington's fell quite a bit in their perception. It's still in the top 5, but it's no longer vying with New York for the number 1 position.
Thanks so much for joining us, Jim.
You're very welcome. Thank you.
I'm Carissa Chappelle for REIT.com.